MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Some wild swings in the markets, that's for sure, since we last spoke.
What's driving those wild swings, and are they going to slow down right now?
Well, going into this month, the dominant trend in the markets, I actually think, was the fact that the U.S. stock market was going up while almost every other market in the world was going down. And this was happening in dramatic fashion. In September, we saw some breakouts in bank stocks, that sector, defense stocks, and semiconductor stocks, but they all turned into false breakouts, and those sectors all came down. But I think after the Fed meeting here in the United States, the U.S. stock market slid to do what the rest of the world has been doing since June, and we took a big tumble last week. The Dow fell 800 points in a day, and both the S&P and the Dow hit their 200-day moving averages, and as we're speaking, we're now bouncing off of them. Something similar happened back in February where the market averages did that, and then they kind of stabilized, and they spent months doing their stabilization though, and then, went higher. But this is a little different because when that happened in February, there was a lot of fear selling, panic selling in the markets. For instance, the VIX indicator, which measures the premium people are paying for options, and it spikes up when people scramble to buy puts because they get scared of further declines. It didn't go up like it did in February. It didn't even get above 30, which is the level it needs to get to panic. And as we're speaking, it's back down. So I don't see that this drop brought any real fear among people, and people aren't really worried. And that makes me worried because when you have corrections, they usually end in panic selling, and we haven't really seen that. So I'm fearful that we could actually see the averages go below their lows of last week, which would trigger more selling, probably down to the spring lows. So I think that's a dangerous situation that we now face in the United States stock market, and that would probably mean more declines in world markets, a continuation. So it could be that this is really a key pivotal point, but that doesn't mean everything's dropping. In fact, last week when the markets took a tumble, maybe the most noteworthy thing is that gold rallied. It had fallen down to about 1180, and now it's back above 1200. It even went above 1220. And the mining stocks also got a very nice bid. The GDX gold stock ETF went above 20, for instance. And also, what is also worth noting is that bonds declined too when the stock market fell last week. So they're not acting as their traditional safe haven. In fact, most of the media in the U.S. is saying that the falling bonds are what caused the stock market to drop. And if that's the case, the bonds look like they're going to go down too, after bouncing, here. So I think we're seeing what could be the start of a trend last week. But right now we're in a pause situation, where the markets are bouncing off support, and gold stocks had big rallies and now look like they're pausing. And if they go up again, then they'd be off for the rest of the year and beyond. So we're in an interesting situation where the U.S. stock market might be getting ready to go into a downtrend and gold go into finally a sustainable uptrend.
We'll have more with Mike Swanson right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, do you think gold is going to be the big winner this year?
Well, the way things are set up at the moment, it does certainly seem to be that could be the case. First of all, to get in the red, the S&P 500 would have to fall about 150 points. And it could do that before the year's over. It really could. In gold stocks, the GDX would have to get to about 22. And yeah, if it pauses here, the GDX is the gold stock ETF, and the recent high on it is basically, the high yesterday, 2030 or so. If we break that in a couple weeks, it'd be easy for it to get up to 22 and be in the green for the year. So yeah, I think when the year is over, that certainly could be what we're looking at, a move in gold stocks and lower move down for the stock market.
What about the actual bullion? Is it expected to make a big move?
Yeah, I think so. It would go up with gold, with the mining stocks too. I don't know if it would be able to get, above 1,400, but I think we certainly could see it above 1,300. And one noteworthy thing is that inside the futures market, the commercial hedgers and producers are actually net long as of last week. They're net long 17,000 contracts, which is the biggest net long position they've had since 2002. That's 16 years. So they're bullish and they tend to be correct. They're not traders. They're like long-term accumulators. But they tend to almost always be short because they use the futures market to hedge production. So the fact that they're, taking their hedges off, it means that they believe gold at 1,200 is a solid investment price point.
What about people who, although gold is traded in U.S. dollars, are using their own local currency to buy it? Does that give them even more of an edge? Yeah, I think so. Especially now, because what we saw in June was the start of a big rally in the U.S. dollar, which I think coincided with the U.S. stock market also kind of breaking away from the rest of the world. Now, that U.S. dollar rally faltered last week, and the dollar's trading in a range, and if gold goes up, the dollar's probably going to roll over because they kind of trade opposite to each other, which would also indicate that other currencies are probably going to do well too. I wouldn't be surprised if the Canadian dollar doesn't get a bid into the end of the year. Even the Chinese yuan could get a bid into the end of the year. We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, interesting, the day before recreational pot becomes legal in Canada, marijuana stocks in Canada have fallen. Was that unexpected?
Well, it was for me because I was watching these stocks yesterday, and Canopy Growth is, the biggest one trading on the U.S. stock market, and it finished at a new 52-week high after consolidating in a narrow range. I don't own it, but I was just watching it. And many of the other marijuana stocks are in the exact same position, and now they're all down. And I wasn't expecting, them to fall as much as they have. However, I would suggest that this is type of action where you get a breakout and then a dump. It's a false breakout. It fools people. This was happening in many sectors last month. The bank stocks broke out. Now they're, dumped and lost all the gains they had in September. Semiconductor stocks did the same thing. So this type of fake breakouts in sectors is starting to happen in the market. So that now that it's happened in the marijuana stocks isn't too shocking. And in fact, the marijuana sector is probably the top performing sector of the year, even though it's a small sector. So false breakouts are a signal that this stock market as a whole is in a topping formation or at the end of a bull market or start of a bear market. So I think it's more evidence that it's really time to be overall cautious. And the reason why gold can do good is it's really a counter trend, a safe haven type trend, especially in a time when the U.S. dollar and bonds are, potentially going to be weak going forward.
Oil, is this going to be a real speculation thing considering the situation with Saudi Arabia and the missing journalist?
Well, it looks like, we saw oil spike up a little bit, but I don't know how much impact this news is really going to have beyond this week because, it looks like the United States is going to, I'm not sure how to put it, but, engage in a friendly cover-up with Saudi Arabia and let this issue pass by. Right from the get-go, Trump said, we got all these arms deals with Saudi Arabia, and he was implying that they're more important than the missing journalist. So I just think right there, right from the start, kind of tells you this isn't really going to break out into a big issue beyond mere symbolism, we might, which is what we've seen from corporate America. We've seen some companies pull out of some conference over there, but so far I haven't seen any evidence that these companies have pulled out any investment money from Saudi Arabia. And the U.S. is just tied at the hip. We're engaging in this war in Yemen with them, and also really the Middle East policy of the United States is more about making Iran into an enemy, and therefore Saudi Arabia and Israel are our friends. So I just think they're going to kind of let this whole thing pass over.
Are you taking a look at uranium stocks right now?
They're interesting. I do think, they're probably going to do fine going forward. I see base building that's taking place in that sector. You can look at the URA ETF. It's trading at 13. I think it'll do well. It kind of lags gold and silver. When they go up, it tends to eventually follow suit. And really that's kind of the story with many commodities. Another sector I like, that I think, it's going to lag, but also as interesting as the agriculture sector. You can look at that with the DBA ETF. But the uranium stocks are, more volatile. They'll go up more than agriculture ETFs will go up. Kimiko, for instance, it can double, once it gets going within 12 months.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.